All right. Hello everyone. Hope you're doing all right. And welcome back to this new video. Now we are slowly starting to get into the more advanced stuff and I'm absolutely loving it. I'm very excited for it. So in the previous 7 episodes, so the first 7 episodes that you watched on the A to Z guide, they were touching on PD arrays. So that is premium arrays and discount arrays. So either bullish arrays or bearish arrays. And these PD arrays are where price can reject off of, where price can potentially push higher from or push lower from. So these PD arrays, what that creates is a PD array matrix. Now, obviously that's just a very fancy word and I'm going to dive into price and show you exactly what that is, etc. Now in the top right, you can probably tell there is FLOD and there is LLOD. That is first line of defense and last line of defense. So if we take a look at this price action leg right here, we have a swing high right here and a swing low right there. That in itself, so this right here is a price action leg. That is a price action leg we are focusing on right now. Again, swing high, swing low is something we will get into, don't worry. Just keep in mind that this is a price action leg. Inside that price action leg, we are scouting, in this case, obviously also with the help of hindsight, we are looking at bearish prices. So we are scouting for all premium arrays. So please do me a favor and go over all the premium arrays inside that price action leg. There is fair value gap right there, overlapping with this order block. Then we have this fair value gap, but there is also a BPR. And then the last one is that high. And that high is a liquidity pool. So in this case, we have a first line of defense. What is our first line of defense here? That fair value gap overlapping with that order block. That is our first line of defense. Now we can even argue, of course, the absolute first line of defense right here is this fair value gap because the order block line is a little bit higher, as you can see right there. And then the last line of defense is what? That high. So when we have a retracement, and we can see the retracement is happening right there. When we have that retracement, one of those PD arrays should hold. So right there, we have a first line of defense and the last line of defense. And that is very important for you to understand. So if we move on right here, we are having a new price action leg lower. We have this swing high, we have this swing low. Inside that, what do we create? We are creating an order block right there. We are creating a fair value gap right there. Then we have some sort of rejection block. I like the big wick right there. And then the last line of defense would be that high right there. The first line of defense would be that fair value gap right there. What happens right here? We are disrespecting this last line of defense. So what does that create? A new price action leg, something new that we can work with. What is the recent price action leg right there? Swing low, swing high. What is the first line of defense? That fair value gap right there. What is the last line of defense? That low, that swing low right there. So ideally, we should not come below that swing low. And again, remember the liquidity pools. We can come below this low right here, but we shouldn't stay below that low. So that is very important. So we have a first line of defense and we have a last line of defense. Obviously, inside of that first line of defense and last line of defense, we have even more discount arrays, as in that high and this order block as well. And that makes it interesting because then we can get a clearer view of where price will likely reject off of. Because obviously we now have a lot of PD arrays inside one price action leg. And I already told you in the previous videos on where we can expect price to actually reject off of. And we see the perfect example in this price action leg and in this price action leg. And even in this price action leg as well, right? whenever there's multiple overlapping PD arrays, that is the most beautiful place where we want to see price reject off of. What do we have here? We have that high and we have this fair value gap. What makes that? 2 PD arrays, 2 discount arrays. What do we reject off of here? We have that fair value gap and we have this overlapping order block. What does that make? 2 premium arrays. What does this right here make? We have this first line of defense, but right here we have a fair value gap and we have that order block right there. What does that make? 2 discount arrays. And then right there, this would be your last line of defense, that swing low. And this is your price action lag, obviously swing low to swing high. So whenever the first line of defense is holding, you can probably notice a certain pattern. It is usually 9 out of 10 times it is overlapping. So whenever you see that first line of defense holding, and usually first line of defense is 9 out of 10 times it is a fair value gap. And the thing I want you to focus on when we have that first line of defense, and it is usually a fair value gap, is that fair value gap overlapping with another premium or discount array? If yes, there's a high chance that the first line of defense will hold. If it doesn't hold, we have certain PD arrays in the middle, and then we have that last line of defense. That last line of defense should not get violated, should not get invalidated. All right, so if we take a look at a bit more price action right here, we are having right there, we have an order block and a fair value gap, right? Perfectly right there. Right there, this high is the first line of defense, right? That old high, so this high would be your first line of defense. So in this case, it isn't a fair value gap, but if we take a look just a bit lower, what do we see? We see 2 discount arrays overlapping with each other. And that is what I'm trying to tell you. That is what makes it so strong. Now, what is your last line of defense right here? That right there. That is your last line of defense. This low shouldn't get invalidated. Now, the thing I want you to understand is we need to think in probabilities. So yes, sometimes it might bounce off of a fair value gap without an overlapping PD array. Yes, sometimes it might not even get into the fair value gap and it might just take off. Yes, sometimes the last line of defense will get violated and price will still continue in that intended direction that we first had. And that is completely normal because this stuff, this trading stuff is not binary. And that's where a lot of people go wrong. They think it is binary. They think when I tell someone it is low probability conditions, that you should 100% lose. Because low probability conditions, oh, you should lose, it's binary. And that's absolutely not the case. Trading is probabilities. And when I tell you it is either high probability or low probability, it is about probabilities. It is not binary. Yes, you can still win in low probability conditions. Yes, you can still lose in high probability conditions. But the odds in high probability conditions are way more in your favor. So let's say we have an 80% win rate in high probability conditions and we have a 20% win rate in low probability conditions. Yes, there is still a chance that we can win in low probability conditions. But always ask yourself, if you had $1 million in capital or even 10 million in capital, would you risk it on a day where you know the odds are not in your favor? And that's the same for those fair value gaps. When these fair value gaps are not overlapping with another PD array, just know, yes, they could still play out, but the probabilities are way higher when you wait for it to come into a fair value gap that is overlapping with another PD array. And that is so crucial for you to understand that these things are not binary. And that's what a lot of people think. And it might seem very obvious what I'm saying right here, but I've seen so many people that are trading low probability conditions and they tell others, oh, but I'm winning in low probability conditions. Yeah. Yes, you are getting very lucky. The probabilities are still, there's 20% you can win. Absolutely. So you just dodged a bullet. But if you do it on the long run, that is likely not going to end very well. And that's the exact same with overlapping PD arrays, etc., etc. All right, I want you please to study this. Study the price action lag, study the PD array matrix, the first line of defense, last line of defense, and also study what happens if that last line of defense does get violated. And again, remember, right, last line of defense, yes, we can take a liquidity pool before we move lower or before we move higher, but there's a certain type of invalidation. And again, that's where your studying comes in as well, and I've mentioned it as well. So study that. When does the first line of defense hold? If it doesn't hold, why doesn't it hold? See the probabilities play out. Then on Sunday, we have a live stream, 8:30 a.m. New York local time. So feel free to tune in and we can just have a little chat. And if I don't see you at the live stream, I will see you on next Tuesday on the next episode on the A to Z guide. All right, study, take care, and thank you.